Welcome to USAWatchdog.com. With us once again, David Morgan. He is a financial expert, really, and a real expert on silver. And a lot of people come on and say, you have a lot of gold people on. What about silver? Well, today's your lucky day. We have David Morgan from silver-investor.com. David Morgan, thank you for joining us today on USA Watchdog.
Greg, it's my pleasure. Thank you.
Well, right out of the gate, it was something that you sent me in the pre-interview. And it was about this upcoming G20 Bretton Woods Committee meeting going on in April. And a lot of people don't realize this, but the world has been asking the U.S. to reform to get its financial house in order. And now it looks like, it doesn't look like we're going to do anything. It looks like the world is going to force a reform on us. Will you please tell me about that coming up here in the second week in April?
Yes, certainly. First of all, most people think that the G8 has a lot of clout, but really the U.S. just came out and said that they're going to sanction Russia out of the G8. And Russia basically blew it off and said, we don't care because it's the G20. So this is referring to the G20. And as you said, Greg, the impetus is that the U.S. has had too much financial power backed by the military force for far too long, and they're going to implement change one way or the other. The IMF is basically an extension of the United States. I mean, even though it's called the International Monetary Fund, it is really U.S.-based. With what's been proposed here, the IMF is not going to have the clout that it once did because the G20 is going to be able to overrule the IMF's vote, if you will. So this is a point in history, in monetary history and global economic politics, that could set a precedent from some point, let's say in April 20th, whenever this takes place, where it's official that the United States dollar has lost its primary status as a reserve currency. So it really is a very important point. It's something that everyone should keep their eye on, and we really need to look at the outcome of what this portends for the U.S. dollar going forward.
Well, let's get down to street level. I just had James Rickards on. He has a new book called The Death of Money, and he brought this up, and he said, they may do a gold standard. They may do something called SDR, strategic drawing rights. And he says, people really won't understand where the inflation's coming. Could you explain where the inflation could be coming? And I don't mean for the kids and grandkids. I mean, after the middle of April?
Well, for years and years, decades, the United States has basically exported their inflation. Because it's the reserve currency and we have the ability to just print at will, we have pushed the U.S. dollar overseas, into Japan, into China, into Europe, all over the world. And now these dollars could be repatriated. In other words, these huge hoards of dollars that are held by foreign interests can come back and buy anything and come back in the U.S. So it's a very simple concept in economics, supply and demand. And the supply of dollars is huge. And the reason we haven't really seen inflation is you haven't seen the velocity of money. You haven't seen those dollars being used to be spent. This would portend, I need to get out of the dollar. I need to get something tangible for it. So it could send the markets into a bit of a panic. I want to be conservative here, but you could see a lot of dollars come back to buy what? U.S. real estate, businesses, gold, silver, any tangible asset. Basically, it would be an impetus for these countries that don't need dollars anymore because the dollar's not king currency anymore. Well, if I don't need these dollars, I don't settle oil in dollars. It's not the supreme currency. I need to get out of dollars. If that mindset took place widespread, you could see the dollar dive in value versus other currencies. And this is a problem because there's so many dollars out there that are doing nothing right now, but that could change like a flock of birds. They're all flying in one direction at one time. Then all of a sudden, for no reason that we can understand, they go the other direction instantly. So you could have an instant change where people decide, nation states decide, I need to get out of dollars. And boy, if that were to take place, you could see a huge change basically overnight. Will that happen? I doubt it, but it could. The general idea, however, is correct. You are going to see the withdrawal of interest in the U.S. dollar, and it's guaranteed. We've already seen it again and again and again, but this could accelerate it.
Well, a lot of folks think that the foreign countries, they have all these treasury bonds, they have all these liquid dollar assets, and well, they don't want to see their dollar assets lose value, so they're forced to keep them. What say you?
I say you're absolutely right. The problem is human nature is human nature, whether it's an individual or it's a macroeconomy. And the problem is that once someone yells fire and starts for the exit, emotions take over. So, for an example, if the XYZ nation decided to dump their holdings, and they were a rather minor player in the G20, but then a bigger nation saw that happening, they might say, you know what, we're going to get out. Plus, you got to remember all the derivatives, Greg. Most of these positions have counterparty risk, so they're hedged. So they have the hedging ability to say, if the dollar goes down or the T-bill interest rates go up, bond values go down, I'm hedged. So I could sell my complete portfolio, and if as I'm selling it goes down, I'm already protected in theory. I want to make that in theory, but they've already hedged these positions. So there's no reason to think that what I'm outlining couldn't take place. Again, I'm not saying it will take place. I agree with what you said. Everyone wants to pretend that everything is okay. But everyone also knows the emperor has no clothes. So someone could have the, let's say, the guts to exit their position, and all of a sudden other nation states take a look and say, well, oh, he has no clothes, and everyone starts pointing, and they want to get out at the same time. Well, we can do that. We're hedged. Well, who is the counterparty on those hedged bets? So it's a complex situation.
The counterparty, just so you know, so the counterparty has to be liquid enough to pay off that bet. To pay off that debt. And that's what happened with AIG. AIG took on all this risk thinking, whoa, we'll never have to pay it off. We'll just take the premium. And boom, we have, the 2008 crisis, and AIG is insolvent just virtually overnight. And you're talking about this is hundreds of trillions of dollars in interest rate swaps or credit default swaps or you name it is out there. And there's a lot of cases, there's no real backing. I mean, is that right?
Absolutely. When I started on the speaking circuit years and years ago, I used to take a video clip along with me from the movie Rollover. And in that movie, it's the portrayal of getting out of the U.S. dollars. And in that movie, the Arabs decide that they want to cash out their holdings in the U.S. And it hits all the banks in New York. And it's a massive display. If you want to see it on YouTube or my rendition of it, you can type in Currency Crisis David Morgan on YouTube. And there's a much better version, the movie version. Again, I'm not saying that this will happen, but again, human behavior cannot be predicted. That's about all these trading programs and everything that we see all the time. And the high frequency trading and all this stuff. I mean,
can't be predicted to remain logical. That's what you're saying.
Yeah,
can't predict human
behavior for a certain amount of time, but not 100% of the time. In other words, this is what long-term capital management, why they went under. The $1 trillion bet, will be about that was seen as well. And you can predict human behavior accurately for, 80% of the time, 90% of the time, but not 100% of the time. And that's what happened when long-term capital management bet on the ruble, that it couldn't go any lower. And it did. And again, so this is what I'm saying, Greg. I'm not saying this is going to happen, but I'm saying that you can't. And there's this self-preservation mode that we all have. The survival instinct is not only on your life, it's in the financial world as well. I believe that there is a financial survival instinct. And if something like that were to occur, all bets are off. People might say, you know what, I'm out. The dollar is toast. I want out at any price. And once that mindset takes place, it could catch fire. Again, I'm saying unlikely, but you cannot rule it out.
Well, something big is coming down because this meeting that they're going to have in April it's a you do it or else. Either you get your financial house in order, the G20 to the U.S., or we are going to get it in order for you, and you won't have any veto power. Doesn't that mean that something happens pretty bad for the dollar this year? They're not talking about years down the road. This is it. I mean, they first introduced this in 2010, and here we are 4 years later, and what we just voted on a new budget deal, which unlimited spending. I'm sure the world loves that. So couldn't something bad happen in terms of devaluing the dollar happen this year before summer?
I agree with Greg. Something, bad could happen. for U.S. dollar holders, which is a great deal of nation states and of course the U.S. population, but good perhaps for rebalancing or resetting the economic system. I mean, I am libertarian primarily, and if you look at the facts that 5% of the world's population, the United States, uses 25% of the world's resources, there's an imbalance there. Now, I'm not saying what's right or what isn't. In a real free market, the marketplace will determine, how and why assets are distributed. But there's so much regulation and all this nonsense that's going on in the financial markets with the derivatives and with the amount of manipulation that takes place. But coming back on point, we are at a crossroads, as we said earlier, and this is something that bears watching. And basically what's being said in plain English, in my view, is that we've had enough. It's like the movie, I'm mad as hell and I'm not going to take it anymore. The basic, maybe 19 out of the G20 are saying we're mad as hell, we're not going to take it anymore. Either you get it together or we're going to get it together for you. I think that's the bottom line, as you stated. I agree with you. Something is going to take place this year that will have such an impact. And perhaps when it's announced, it will go over the heads of many, but the people that are really awake and aware will say, that's it. You might not see it initially, but that's it. The earthquake's rumble has started and the U.S. dollar has lost its status on the international markets.
Do you see Jim Rickards was talking about maybe a panic into gold buying, and I would think that would be extinguished pretty fast because the people and the money people are already buying it. It's pretty clear. Demand very high. I think Iraq just bought 36 tons of gold. I mean, the Central Bank of Iraq. So something's up. And then that trickles down to what's next. That'd be silver, and that's where you come in. What are your price targets on silver if the U.S. dollar ceases to be the world's reserve currency? And I think it could be abrupt and not gradual. What happens to silver?
Exactly. Well, a couple things I want to preface it with is if there's a gold panic, and I think that there actually is right now, but it's subtle, meaning China is buying gold hand over fist, India as well. You see it a little bit in the mainstream press, but they make light of it. Nonetheless, the rush into gold is primarily nation states. But the rush into silver is basically the people. And it's not just the people of the U.S., it is the people of the world. Silver has been money more places and more often in history than gold ever has. Gold has always been basically nation state to nation state settlement. Not that you don't buy things with a gold coin. You can, of course. But silver is the one that's used. So what will happen, in my view, and this happened in the late market in 1980 or late 79, was people catch on quickly. And they see what's happening in gold and say, well, I can't afford gold. It's at $2,500 an ounce or $3,000 or whatever. I'm going to buy silver. And since there's many more people that are middle class or lower that have that financial survival instinct that I talked about earlier, they're going to get whatever they can. And the top tier of all the commodities are gold and silver. And why? Because they're money. They last. They don't rot. They store forever. They can be passed down, etc. So there'll be a rush because of gold into silver like you've never seen before. This will be a global phenomenon. It wasn't in 1979. This time it will be. So you will find what Greg Hunter has said time and time again. I couldn't agree more. You either have it or you don't. I mean, if you're a little person, meaning you're just an individual and you want to put $1,000 into silver or whatever, you'll probably be able to do so. But if you are an Eric Sprott or one of these main, large fund managers, and you want to buy 20 million ounces of silver or one swoop, you are not going to be able to do it. It's going to be absolutely impossible. So price targets, I try to look more at value. I mean, I'm on the record saying silver will make $100 US. I believe that may be conservative. But if you look back in history, an ounce of silver is more than a dollar. A dollar is 0.77 ounces of silver. But let's just talk in ounces. Most people know what those are. So an ounce is basically a day's wage in very, very good times. Well, today's wage rate, the minimum wage in some states is like $9 an hour, 9 to 8 to 72. So an ounce would be $72 as a minimum, just to be fair valued with a minimum wage. But if you go back in Roman times, basically a tenth of an ounce was a day's wage. So now you can multiply that by a factor of 10 to 720. So I don't think we want to focus too much on a paper price. I think what we want to focus on is what does silver's value mean relative to the market. So if an ounce of silver buys you a month's worth of groceries, you're looking at, a substantial value versus where it is today. So two things. Silver is very undervalued where it is currently. It's undervalued relative to gold currently, and its value has a lot of upside. Where will we know to get out or to trade for something else is based upon what will an ounce buy or ounces buy. If you can buy a home, a median price home for 2,500 ounces of silver, you're probably pretty near the top of the market. So this is how I really want to look at it. Paper price, of course, is something I think people focus too much on. What you really want to look at is what does it purchase relative to what it did in the past. We have not got to par. We have not got to where it historically was. And we're writing about that, and we'll be writing about that in the future.
Well, you're saying that right now, $72 would be probably par, an ounce.
Yes, I'm saying as a minimum, at a minimum wage level, you would be basically $100 an ounce, because really a dollar at definition is 3/4 of an ounce. So 3/4 of an ounce is 72. That's almost divides it perfectly. So you're looking at roughly $75 to $100 an ounce is fair value for the minimum
today,
wage
right now.
Right now.
Well, speaking of that, then the vicious attack on gold and silver again. It kind of crawled its way up, and I've been listening to your, I think at 18 something, you said that's the bottom of silver. That's it. It's not going to go any lower. And I see it has come back down, and I get the feeling you're not worried. That you think the bottoms will hold the 18, whatever it was when you came on here a few months ago and said that's the bottom in silver, 18 or 19 bucks, somewhere in that neighborhood. Now it's 20 and change. You're saying that this vicious attack is just not, is it going to work? Is it going to keep continuing? Tell me about this naked short selling. And now we find out through, a couple of different reports on both sides of the pond, even in Bloomberg was saying, yeah, the price of gold's been manipulated viciously for 10 years. Is the price manipulation, how long is this going to go on for? People are saying, how long? I mean, I've been hearing this, that, it's going to go up and whatever. But, boy, the guys in the paper market are killing it. Give me your thoughts on that.
Well, for the record, I'm always worried because a lot of people know and trust me, and that's great, and I appreciate it. I do think the bottom is in, but it's no guarantee. I do think that they will push it down as hard as they can, and I do think that the bottom of 1817 intraday will absolutely hold. But there are others that disagree with me. Time will tell. So far, I've been right since I called the bottom, but nonetheless, doesn't make me right forever. We'll find out. The ability for them, meaning the powers that be, to push the price down at will end. All manipulations end. And the way it will end is that the inability to deliver physical to someone somewhere at some time will get into the public domain, and that's basically the end. So there will probably be two markets, and we already saw the portent of this in 2008, where you had a silver paper price and a silver wheel price. eBay was selling $13.50 silver, but the markets in the futures category were at $9. And so that's already taken place. So I think you'll see that again. And I think you'll go, as Jim Sinclair has said, where you'll have a cash market only, where basically the futures market will fail. And there's nothing wrong with that. The reason that they're able to get so much leverage is they practice fractional reserve banking in the metals. Every ounce out there represents 10 or as much as 100 ounces. So those derivatives products that are moved back and forth. I mean, basically, the content of how much silver exists above ground that's available for delivery might be, in a year, we mine maybe 800 million ounces and recycle 200 million. But the turnover is basically a year's supply over a day or two or three every day. So we're turning over the amount of a year's supply day after day after day. Well, this is ridiculous. It doesn't represent anything but a bunch of paper products being thrown back and forth between major banks most of the time.
And does this end? Does this end when we can't deliver the silver? We can't deliver the gold. That's what you're talking about?
Absolutely. And I want to be clear that it doesn't end the exchange, because the exchange is smart and run by smart people that basically are always on the short side of all the commodities and manipulate them to their benefit and rob the pockets of the public constantly. But they wouldn't fail per se, because the contract already says, well, we can force you to take delivery in fiat currency instead of the commodity itself. So technically it wouldn't be a failure. But in reality, of course it's a failure. And that's what I think will take place. And once that takes place, there's really no coming back, at least not for a long time. So you go to a cash and carry market only. What will you pay me in this currency, that currency? Or probably more likely, it'll go back to barter. How much oil will you give me for this much gold? How much, lumber will you give me for this much gold? That type of thing. I mean, it sounds absurd. It's definitely outside of the box thinking. But basically, what is money? Currency is an intermediary between a barter situation. It's something that's supposed to store value, but it doesn't. Real money does.
When the question everybody said, when? When are we going to have a failure? When do you predict that there could be a failure to deliver? Not actual failure of the futures market, as you said, they'll settle in cash, and the contract says they can. But it's a failure. When do you think it happens?
Very tough. Whenever you say that, and then you'll get a lot of emails, you're wrong, and I'll stick my neck out. I see the acceleration taking place the latter half of 2015. I think 2016 is the seminal year. I think somewhere in 2016, the game is over, meaning that there'll be a realignment of the financial system on a global basis, one way or the other. I don't even want to go into what those possibilities are. We could talk about that in another show. But I think we've really got all of 2014, a transition year, 2015, the latter half being the acceleration in the metals where people just throw in the towel and say, I get it. Nothing is working. All this jibber jabber from the powers that be is meaningless hot air coming out of their mouths. It really means nothing. And then you'll see a panic, manic move in the metals like you've never seen in the history of mankind that will go into the financial record books for eons.
This is not in 2014, though. This is 15 or 16.
Probably 2016. I see acceleration starting in 2015. And once it starts, it'll be like the technology boom that took place in the 2000s. I remember a lot of commentators in the mainstream saying, look at Intel stock. It's up again today. My, I can't believe it. That stock goes up every day. Well, they'll be saying that about gold. My, look at gold. It's up another $50 again today. I can't believe it. Gold never goes down. It's up again. Oh, it's up again. And then I'll build and build and build. And that's just the beginning. Because when the panic, manic buying takes place, this is when everyone wants to repatriate their dollars for anything but holding them. The panic out of the dollar, then you'll see it go probably up limit. They may put a circuit breaker in and say gold's fixed at this price temporarily. Who knows what they'll come up with, but it won't work.
But couldn't Wall Street front run that trade? I mean, once they see that this G20 meeting in April is, well, you know what, you haven't done anything, we're going to force it. Couldn't people front run that trade? Couldn't the guys in the future markets themselves go, okay, we're at the bottom, let's push it the other way? Couldn't that happen?
Oh, absolutely. In fact, I think it can be guaranteed that they will do it. They may not do it in their, JP Morgan account where it's transparent and can see it on their balance sheet or see it in a financial statement. But that doesn't mean that they wouldn't participate in an offshore account or some, shell company named, some name that actually holds it. So, yeah, these people are not idiots. I mean, they are running the financial system. They have an extreme amount of hubris. They think that they're gods on earth, so to speak, that they have complete control, that they can, power is about control. I mean, power, you only have power if you have control. And they're losing control. And they're frustrated about this. I mean, I don't have time to go into the bank or death thing. But if you connect the dots there, that's about controlling their power as far as I'm concerned. These are not random events. I mean, these things are not because these guys are stressed out, like Bloomberg talked about a couple of days ago on their article. Come on, give me a break. Are people really that stupid? No, there are, this is really something I've ever said very seldom in a public domain, but I don't mind saying it. As far as I'm concerned, this is my strong opinion, and I'm entitled. It's really a war about good and evil. I mean, you have massive, massive evil at the top, and then you've got the average American or average global citizen out there that I believe, in my heart of hearts, is basically good, and they're doing the right thing, and they're trying to, do right by others, etc. And you've got this massive evil empire that's global. It's not nation states that we keep talking about. That's part of it. But it's basically the corporate America. It's the corporate rule. It's the technocracy. It's the power between the banking interests and the interest of the largest corporations to basically control people, to move them whatever direction they want and give them the illusion that they have freedom, when, of course, in reality, they have less and less all the time. That's what it boils down to in my book. And I know I'm getting off on a little bit of a spiritual tangent, but it's something I'm very passionate about. I mean, I've been speaking more in the freedom lectures and more in these liberty conferences where I really don't talk much about the metals, although it plays into it. But the real issue isn't about how much money you're going to make in the gold and silver markets like in 1980. It's about whether or not you have the ability to spend your capital gains as you wish. If you are controlled with what the amount of taxes are on them, like if there's some kind of windfall profits tax of 92%, what's the point? I mean, basically, again, it's about control. But my belief is they're losing control. And I read the last chapter. As far as I'm concerned, we win. But it doesn't mean we win without some scars on our backs, so to speak, as a metaphor, because it's not going to be easy. It's worth fighting for, in my view.
Well, the last thing that you brought this global power struggle up that I wasn't going to bring up, I read it in Israeli newspapers that the Israelis are closing embassies and consulates globally. Now, they say it's because of a strike, but a lot of people are out there saying, oh, something big's coming. And this is just before this G20 meeting in April, and they're closing their embassies down. It just seems to me, wow, that sure is a bizarre coincidence that all of a sudden they're going to close all their embassies, which has happened never, and they're going to bring everybody home. And some people say, well, it's because they want to protect Israelis, and they're going to bring them home under their umbrella. That's what some people say. Now, the overt reporting is they have some sort of strike, and the embassy workers are being asked to take a pay cut. But what say you, briefly?
I'd say we're getting closer to the end all the time. And Israel is, of course, a nation state to watch very, very closely. And usually they are a leading indicator. I think this is very much a leading indicator that regardless of what people believe or want to believe, the war is imminent. And it's going to be a twofold war, in my view. Yes, it will be a shooting war, but it'll also be an economic war. And it'll probably take place simultaneously. It could get rather interesting, my favorite word, as we progress through 2014. And I think, as I said earlier in the show, you're not going to see the real results on a financial basis probably for a couple more years. But the start, it's happening this year. It's happening right now.
David Morgan, silver-investor.com. Thank you for joining us today on USA Watchdog and sharing your views on silver and the geopolitical situation around the world.
My pleasure, Greg. Thank you.